Hello, I'm Shain Vernier, analyst over at forexsignals.com. Today we're going to talk a little bit about one of the biggest parts of trading. We're going to talk about knowing when to fold them. We're going to talk about stop loss locations, understanding where to get out of the market when our trades aren't going our way. Now, I can tell you I've been in the markets for over 10 years. Over a decade, I've sat there in front of my screen saying, where do I need to put my stop loss? Is it important for me to know where I'm going to get out before I ever get into a trade? And the answers to both of those questions are easier than you think. You don't need to be a rocket scientist or a quantum mechanic to know where to get out of your losing trades. Now, what I would say moving forward is we spend infinitely much more time talking about where to get in the markets as opposed to where to get out of the markets. Today, I'm going to talk about a concept called the hard stop. The hard stop is a price point. It's a location where you know if price goes, your trade idea is no longer viable. Your opportunity at profitability is nil and fading quickly. We're going to talk about what happens and what to do when your hard stop is violated. We're going to talk about how to save money. I can tell you from experience that I've saved more money on having great stop losses than I ever made in profitable trades. It sounds counterintuitive. What are you talking about? You're getting stopped out. How are you making money? I'm not blowing my accounts out. I am not going down in a blaze of glory and watching my account balance go from something formidable to nothing at all. We're going to talk about how the hard stop can help you avoid catastrophe in the markets. It's not enough to have great trade location. It's not enough to have great entries. You have to know when to get out of your losing trades. Nobody wins them all. The best hitters in baseball typically hit right around 330 to 340. 34% of the time they're looking to get on base safely. As traders, a lot of our strategies are based on 25 and 30% success rates. Even at 60%, half of the time we're going to need to know when to get out of our trades. That's where the hard stop comes in. That's where the idea of pulling the plug before price action gets very, very bad and the damage gets very, very severe becomes your way to secure profitability in the marketplace. So let's talk a bit about the concept of a hard stop loss. What is a hard stop loss? If you're a trader, you've undoubtedly heard the term stop loss in the past. Basically, a stop loss is a price point where your trade is no longer viable. Basically, we're wrong. The trade setup did not function properly. It did not work. And now it's time for us to get out of the market. Over the course of time, if you're in this trading environment for any period, any length, years, weeks, months, whatever, you're going to find that the amount of money you make on your stop losses can almost outweigh the amount of money you make on your profitability. Always remember, the name of the game is to get out of these positions as quickly as possible once we know that our trading signal or our strategy is not a viable way forward. So when we get into this, there's a couple other questions we need to ask us. So a hard out, that concept of a hard stop loss, a price point where we know we're wrong. There's a few things that it does for us. It makes us money. How does it do that? How does our stop loss make us money? Number one, it removes all discretion. There's no more discretion. Once that price point is hit, we are exiting the market with speed, with dedication, and with vigor. Number two, it takes the catastrophe off the table. You cannot blow your account out if your stop loss is located properly. I don't care how ineffective the trade is. I don't care how ineffective a series of trades are. Your trading account will remain viable. You will be, I would say, liquid. You would be solvent. You will be able to trade another day. And the third thing it does for us is you save what you earn. When you save money on a stop loss, when you cut a losing trade off, you earn that money. You have to see that as revenue. You don't have to put on more profitable trades to make up your losses. A big loss shouldn't take 10 profitable trades to make up. What we do is we cut off our losers. We realize our winners, and in doing that, we earn. Our stop losses earn us money. Now, let's take a look at a real-world example. Probably the best way to illustrate the concept of a stop loss, and particularly a hard out, is just to go right to price action. Take a good look at a really recent event in history. Something we haven't seen since 2002. This is a Euro USD daily chart. We saw a return to parity since the post 9/11 era. The first time we've seen €1 for $1, $1 for €1 in nearly 20 years, or actually a little bit over 20 years. So it stands to reason that many traders were going to look to get in and buy right above that parity level, maybe play a retracement off of that key long-term big round number. And that's exactly what we saw price action-wise. Now, The big question that I would have for any trader, regardless of experience or regardless of strategy, is if they were interested in buying the Euro USD from parity, where would they align their stop loss? In my view, a hard out location would be an area where we knew our hypothesis was wrong. Our trade was no longer viable. If I'm looking to buy parity in anticipation of a bullish bounce, then as soon as that parity level, that one-to-one level is taken out, our technical zone right here, as soon as it's no longer valid support, I have to exit the trade. So when I'm aligning my heart out on this trade, I say, okay, what do I have? Number one, my reason for getting in the trade was parity, the one level. Okay, we've got that. We've also got a nice daily doji right there, our doji right there at 99.99. We can put our heart out stop loss right beneath our 99.99 level. We could shade it a few pips. What does that mean? It means we give it a few extra pips to work it out just in case our spreads get chaotic down around this key level. And then we can exit the trade with confidence. So as you can see, somewhere between 99.89, 99.74, you've given this trade a few pips to work in your favor. Once we see price break beneath that parity level, it's a safe assumption that this market's not done going down. It's not done putting in an intermediate term bottom, and it's time for us to get out of our long trade from parity. So that's an example of a hard out. Remember, once your hard out is hit, once your price point is hit, the trade is liquidated, the position is flattened. There's no ifs, ands, or buts. What you save today will pay you off sevenfold tomorrow. The most valuable tool as a trader that you'll ever acquire is understanding where to place a hard stop and how to execute a hard stop. You will make more money over the long run cutting off losing trades than you will ever letting the winning trades run. The key thing to remember is when your stop is hit, you're out. No guesswork, no inner conflict, you're out. The position's closed, you are now net flat and ready to fight another day from a position of strength. In any case, I hope you've enjoyed this video. It's a big topic, and we cover a lot of these topics over at the Forex Signals Trading Room. Feel free to pop by. We do 8 live streams a day. More to the point, be sure to keep checking in with our channel here. We're just getting back up and rolling with some regular content, 2 videos a week from our team of analysts. We've got Nick, Scott, Max, and myself, Shain Vernier. Be sure to check into this channel. There's going to be a lot of content, and moreover, we would love to hear from you. If you've had any issues executing your hard stop, or if you have that tendency of letting those losing trades run, not understanding that, hey, if I get out right now, I'm going to make more money than if I stay in. If you're having trouble there, let us know some of your problems below. Leave a comment. We would absolutely love to hear from you. We would also love any ideas that you guys want to hear about on this channel. We're more than happy to get into really anything you want. Now, from a personal standpoint, I get intense about my trading. I love trading. I've been doing it for a long, long time. I think that if you get your hard stops in line, if you know when to hold them and when to fold them, you're going to find yourself in a much better position moving forward. So we can't wait to hear from you. Drop a message below. Be sure to reach out to us on the socials, and we'll see you in the trading room.